Hi, this is Jeff Scott, and welcome to this week's edition of my top-down review. It's late, almost April 26th. It's late on Saturday night when I'm recording this. My email address, if you need to contact me, is at hgsidoc@gmail.com. And as you see, today is 4/26/2015. And I've entitled this video, Come Fly With Me. Whether you want to fly an airplane or you want to be long the market, things seem to want to go higher from here, and that's what we're going to talk about today. Disclaimer, as always, is for education purposes only. I'm a doctor, not a broker. I am truly independent. I have paid for every software tool I demonstrate. I do not own or have shares of any of the companies that I discuss. And at some point, I've paid, again, for every tool that I use. No one pays me to say good or bad things about them. Trading involves risk, and you alone are solely responsible for any investment decisions that you make. I like to refer to my educational style as to be your own guru. And something that I learned from this guy up here in the upper left-hand corner, Ian Woodward, probably 20 years ago, was, I'm not a guru, but I'd like to help you become your own guru. I started with the works of O'Neill, accelerated by Morales and Catcher. Their new short-selling book is out. It's outstanding as one would expect. Ian and Woodward and Ron Brown of Woodward and Brown Investing, sort of the trading philosophy heart behind HGSI, the software program, really took O'Neill stuff, helped me to automate it with, from an electronic perspective, and added to it. I've learned a lot from Alexander Elder. His Trading for a Living book has recently been updated. Highly recommend it. I talk a lot about my trading signals that I get, and much of it comes to what I've learned from John Person, both from his educational programs and packages as well as his signals. And the opportunity to trade with him live in his office and as a mentor has just really been a great help to my trading. And I'll show you how I use his stuff tonight. Van Tharp for position size and money management. And then George Lee, who's my trading buddy from Canada, who's my partner in crime when it comes to the upcoming trading meeting. I own a number of programs, and sometimes I'm smart enough to pretty much make my, what's the word I'm thinking of, hard drive hidden, not my hard drive, my desktop rather, so I don't have to explain to anybody why I have so many, especially my wife. I rely upon TradeStation or Thinkorswim as a real-time trading platform. Frankly, the best charting platform I have, and the one that's most automated, is the Genesis platform, which I use frequently during the day. In fact, I'm about to order a 6-monitor setup, and instead of using multiple notebooks, have a really nice desktop, or in the case, tower. And I can assure you that if you come and see my trading room now or then, you'll see each of these open during the day. Post-market, and now with the delayed intraday feed, I use HGSI for my analysis, EdgeRater, both for me understanding the market as well as scanning for signals. I'm a big fan of seasonality. Magenta Trader, to me, is still under construction, although Derek has launched a new product and continues his education. That's at magentatrader.com. Best Choice is an older product, kind of an antiquated interface, but the data is the data, and the data is fine. And then Seasonality Trader is basically the most recent edition of Magenta Trader prior to a split between the programmer and the marketer. And then I use a number of websites as listed here. Market thoughts. We've been in a long and wonderful uptrend. Everybody seems to be looking for a top, but topping is a process. Obviously, the sell in May and go away theme should become louder as we get deeper into May, which starts in about less than a week. But markets don't usually set new highs and not show any internal weakness and begin a bear market. I'm looking for advanced decline divergences, OBV divergences on the major markets to help give me clues. When I look at the indices, the NASDAQ is at a many year high, 15-year high, and is very close to all-time intraday highs. The S&P 500, although like most of the other indices is in a trading range, broke out above a shorter-term resistance. And transports, which had not been participating and perhaps driven mostly by the airlines this week, really moved off the bottom of their range, as did utilities. On my chart review, yield mattered. Utilities moving up in unison, selected REITs moving off support, bond funds and other yield entities in the specialty finance world, some of the ETFs moving up, and they seem to be driven by yield. As I mentioned before, airlines up and energy is down, except of course for refiners and MLPs who have yield. Now, gold and silver have been weak, but if one looks at copper stocks, one gets the idea that the time for copper might be upon us. Now, I struggle with this because I thought that China has tons of supply, and they're a big utilizer. But take a look at Freeport-McMoRan, Southern Copper, or whatever they call it now, the old Peru copper. And then the semis. Are they demonstrating a market rotation and a major rollover? Or are they just setting up to be good buys? And I think you can see both in the same, within the same group. If you look at something like SLAB, you might see what looks like it's rolling over. And then a lot of stocks like AVGO, which we'll look at, I can't tell yet whether they're rolling over or just pulling back to super areas of support on the 50 and setting up to be great buys. Now, I don't expect you to be able to read this, but one of the things that I do is and actually I'm going to give credit where credit's due, as part of John Person's package, he takes the major sectors and builds out a radar screen. Now, to get more things in TradeStation, you only have 1,000 things in radar screen at a time. I took off the radar screen, and I just like on this group to monitor and get an idea where money's flowing. And it was pretty clear on a couple of things on Friday. Utilities across the board are up. Okay. If you look at transports, CSX has been leading. That was a good buy this week. CHRW Trucker, but the airlines, again, in unison. Take a look at Hawaiian Airlines. I'm lucky to have a position in that. Gold, as I said, has been weak. Now, I was at my new friend Harvey's place on Thursday, and we talked about Newmont, and clearly it's the strongest of the gold stocks, and it had a great day, up 6% on Friday. Yet, it's hard for me to get excited about gold, but perhaps gold is turning around. We'll take a look at that. I'm not saying it's turning around. We're going to look. Certainly Newmont showed some strength this week. Foreign markets are strong, and interestingly, France, ETFs for France looked very good. So I'm looking at this screen within my TradeStation on a frequent basis so I can get an understanding of what things are moving, and it's really remarkable. You see energy, they're all down. You see oil and gas producers, so this is services and solar. Production companies predominantly down, service companies down, financials predominantly down, regional banks down, credit cards down. You certainly get a sense of what's not working when one looks at this type of a picture during the day. Now, as always, we talk about stock patterns are cyclical, and what I basically have felt for some time is that we're sort of cut off the top of this, and we just have very short-term runs up and runs down, runs up and runs down, and the minute one thinks that we're about to head into a deeper drop or a bigger run, we get hit by the top or the bottom of the trading range and we reverse. And we always have to wonder, will it be different this time? So I have to be looking that I'm in this uncertainty stage. Certainly feels like we've got more room to go up, and almost as if we're getting into or in a blow-off state. But not if you have a lot of semiconductors, you're not feeling that way. So for me, that means raising cash, smaller positions, and selling premium. That's not to say that I don't have long and short positions in the market. I went long some contra ETFs midweek. thinking that this market was tired and was hitting the top of its trading range, and I lost money on those. Now, they were some cheap calls, and I sort of bought them as insurance, and kind of like health and life insurance, it's actually good not to necessarily use your insurance on a regular basis. So we shall see. Now, this is going to be a fascinating after hours on Monday. Here's the economic releases from Levitt Brothers, and they didn't have updated their earnings, so I took it out of briefing.com, which is actually their source. And you could look at this, and you could see a lot's going to happen this week. And I think a lot of eyes are going to be at Apple. I think you can single-handedly fix the semiconductor sell-off if Apple has blowout earnings with good numbers on its phone, and perhaps that their initial batch of watches sell. And what you'll see is those that are Windows suppliers like Skyworks potentially taking advantage of that. As I look through here, I see a lot of oil stocks, big drug stocks, Bristol Myers there, Pfizer, Aetna Healthcare, Express Scripts, U.S. Steel, a lot of steel presenting, Cliffs, Twitter, Buffalo Wild Wings, and so on and so forth. I think there's over 1,000 stocks reporting this week. And as my quote, somebody else has said it wouldn't surprise me, but I sort of had never heard it from anybody else. And my quote is a judgment call to hold stocks over earnings dates, and it's bad judgment to not know when your stock's earnings date is scheduled. So you really have to have a handle on when your earnings are coming out, and then you have to decide how you're going to address them. Now, a little bit about Apple. This is the old Magenta, the new seasonality trader. And again, there are many different programs, and I'm not advocating, I'm not representing, I have no royalties, I get nothing by which one you buy, and I own all of them, I paid for all of them. But this is just a snapshot looking at Apple. You can see Apple, at least going back for the last couple of weeks, is in a pretty tight trading range. It seemed to break out of that trading range of Friday. And if one looks at the 5-year seasonality in yellow and the 10-year seasonality, can't remember which is which, in green, one can see that the seasonality prediction is for Apple to go up with this quarterly report. And I've matched it up, earnings, the dates before and after earnings, and aligned them on earnings dates. One can see between April 21st and May 11th, Apple's up 7 out of 10 years for an average of 7.7% up. 2.8% is the average on the down years. If you look out then from May 11th to May 29th, you actually get a stronger period, a weak period in Apple. And Apple's down 9 out of 10 years, but it's only down 3.6%. So to me, this is still a short-term move. I'm in Apple, as I talked about before. I'm sitting on some 128 calls, which I funded by selling some out-of-the-money puts and calls a couple of weeks ago. And now I'm just long my calls, and I'll see how the market behaves on Monday and whether or not I may sell half of them before earnings, so I lock in profits. I get a lot of questions about my process and how much time do I put in. Well, I do put in a lot of time. I can't deny that. And my wife would certainly attest to that. On the weekend, I'll spend about 8 hours. I'll review my current positions and set stops. I review the prior week performance, which is that group performance analysis tool in HGSI that I'll point out as always. I do my top-down review looking at market, sectors, industries, and top stocks. And then from that, and from my watch list that I create each weekend, I create a master list. I then scan the master list for signals such as high-close dojis, person's buys and sell signals. I run my HGSI scans, and then I create a list and I do a chart review. And this weekend, that was about 700 charts. Now, I don't play golf and I don't play tennis, but I like to look at charts. And I really think that over the weekend, I get a great grasp of the market really by understanding what's going on at the stock level. Now, I do have a life, and then from a nightly perspective, I want to spend an hour or less. So on the nightly, I review my current positions and update stops. I take a look at my watch list that I put together over the weekend just to get a sense what types of stocks are working. Are they breakouts? Are they pullbacks? Are they growth stocks? Are they not growth stocks? Then I do the same top-down review I do on the weekend, looking at my direction at the market, and then I look for the top stocks and the top industries. Again, I run my scans, automated scans on my big buy lists, and then I combine the stocks that came out of my top-down review with the stocks from the scans, and I look at about 100, 150 charts, and I get that done in an hour. Tonight's agenda, after my introductory comments, we'll take a look at what I think the market is doing, then we'll do our top-down analysis, and then take a look at some of the bottoms-up things that we can do. Just want to thank everybody. There's been a phenomenal response to this upcoming meeting. I suspect it's my subtle threats that if no one comes and I lose my shirt, then I'm done with these Sunday meetings. But maybe people like my meetings too, which I hope is the reason. I only reserve 15 rooms. I've been out of town for the last 5 days. I've had 5 or 6 PayPal payments already, and probably 5 or 6 checks already at my house. That means I've probably at 12 of 20. I've had a number of people ask me to hold hold spots in the meeting. On Saturday morning, I have a challenge where the large room that I like to use won't be available because somebody's having a sunrise wedding. It's because when I tell you this is at a beautiful resort, I'm not kidding. But sometime around 1 o'clock, we'll be in a larger room. So in the Saturday morning room, they tell me it can hold 27. I don't want to have more than 20 attendees. I've got 3 or 4 speakers. So we're over halfway there. Once I get to 15 rooms, the price will probably go up on the room block. But I'm going to try and, since I'm responsible for filling those rooms, I will increase them a little bit this week so that I try and keep rooms available. I know there's a number of local people that won't be using the room. So if you haven't already signed up, we really love to have you. And again, there is going to be high likelihood that this meeting sells out in the next week or two. All right. Enough of that. So I'll leave that in. So the first thing I usually do is let me open up my files. I usually want to get an understanding of what the market has done. And I'll start with my end of the week report. Now I do this every week and I guess I do this because it forces me to follow a routine. And by following a routine, I'm less likely to make mistakes. And these are a series of scans. Some of these are scans that I do in HGSI, and some of these are scans that I do in EdgeRater. And the intent is to start to get an understanding of what is the status of the market. And as you can see, you can see it's taking a long time to load, probably because it's an absurd spreadsheet with 171 megs of data. I think I'm going to have to get a little bit less anal and figure out a way to make that a smaller spreadsheet. So a couple seconds. Excellent. So let's start with my group performance analysis. And I didn't hide anything, so you're going to see how I did and all that. Not that that matters. So as I always mention, I keep track of a lot of different user groups. Now, some of these groups come out of TradeStation, mobile breakouts from a squeeze in TradeStation. Many of these are scans that I do in HGSI. Some are things I download from investors.com. Some I download from marketsmith.com. Some I download, or excuse me, I get out of Metastock, some different scans. The reason is I want to understand the source of the market, what I think the market is doing. And the first thing you can see is there's just only about 8 or so of my groups were negative on the week. So that tells you it was a strong week. And some of my bearish stocks, it was a strong week. Even the bearish stocks Well, they were down -2%. These were my short stocks. So it was a very good week for my long scans. Contra ETFs, you could see, were down almost 2/3%. So first thing I like to do is I like to find the S&P 500 because this gives me an idea of what good looks like. So good was up 1.75. Then I find that the IBD 50 was up 1.45 and the HGS 100 was up 0.83%. And then I usually try and find the GIF. Now, of course, it's always harder to find things here when I'm under time pressure compared to when I look at things on my own, which is why I usually have done this already. The GIF is one of the things that we'll talk about at the end of the day. That the GIF report, out of the top 30 stocks in my universe, 24 were up, 6 were down, and the return was 2.53. So growth stocks, I'll say, were mixed. The GIF above the S&P, the IBD, and the HGS below. My stocks from a week ago, had I held them, were up 2/3, were up an average of 1.5%. And then the stocks that I looked at, was interested in potential buys this week, I think we're about the same area. We're up 1.26%, nearly 70% of them were up. Potential buys only means that they get entered into a system where I look at them this week on Monday to see if there's something I want to take, or last Monday for the case. So strong market, growth stocks doing about the market. The Hindenburg, which is a sign of a market in turmoil and at risk, you can see there's hardly any new lows in the S&P 15, in the NYSE, all NYSE, and this is the Hindi signal, and there is none. From a bucketology perspective, you can see it's sort of a shootout at the OK Corral, where we are nearly 50-50 on the above and below the midline, the S&P 1500 above and below the midline of the Bollinger Bands, and really nothing that would say that we're likely to go one way or the other this week. Last week I said on my markets report, when we ended a week ago Friday on the 17th, with the line of kahunas to the downside, that I was looking on Monday to see kahunas to the upside and give us a chance to get back on our feet. And lo and behold, what did we find? We had kahunas to the upside on Monday. Now, these are the indexes, and this is their percent B. And you'll notice that several of the indexes are above 1.0 or above 0.9, so they're getting extended. And so we'll have to see how long of a run we have. Now, one of the things that I can do in EdgeRater, and to be honest, I'm experimenting with it, is they have this tool called a group rotation report. I believe it's under Pro Tools. And I take my trading universe, which are stocks above above $2.50 and I think 200,000 shares or whatever I do my cutoff at, and it allows me to scan them and come up with stocks that are ranked by a 22-day percent change, and then average 5-day rank average. I can also shorten the period of time and look at an 11-day, 5-day, 1-day. But I do this because it gives me an idea of which stocks ended the week at the top of our area. Bullish Chinese 3Xs, that's interesting. Petrobras, coming back from the dead, actually went up after announcing a $4 billion charge for corruption. These are the ones that are our biggest rank change to the upside. Echo Global Logistics had some great earnings. Valley started seeing some, both from a Brazil perspective with Petrobras, Valley, and SQM, but also from a perspective of iron ore stocks. Even Cleveland Cliffs was moving this week. You can see over here, these are the fastest moving up, and these are the biggest change in the upside. This is the acceleration, deceleration, and this is rank change. If you look at the bottom some, you see the Russian bear directions ranked at the bottom, which means Russian must be doing better. Ultra short, crude oil pro shares also sitting near the bottom. What else? Biggest rank change to the downside? Gold. Gold still is weak. And some of the oil services such as EMES. And again, you can look at this in various time frames. The other thing that's in these sheets are various scans that I run in EdgeRater looking at, this is a daily squeeze report, and it looks for various types of breakouts occurring within the squeeze. This tells me how long the squeeze has been in play. This tells me I'm in a squeeze. And then I've brought PSAR reversals and mobile breakouts, pocket pivots, and counter channel breakouts so I can look through and get an idea of what stocks are there, both daily and weekly. And I could also look at breakdowns, not just breakouts. Code blue and code red are some scans that take into account a lot of the bullish things that Gil Morales likes for blue, and bearish in red, code red. I mentioned, or steel seems to be moving. Schnitzer Steel, we'll probably take a look at that tonight, is showing some life off the bottom. And one of the stocks that helped me this week was I had a pretty big position in Hawaiian Airlines, and they had a big move on a big earnings beat. Code red would be stocks that I would be concerned about going down, and we're going to find a lot of technology names here: Netgear, RMD, CABM, PMCS, LSCC, IDTI, SMTC, AMKR, VECO are all technology, NXPI, AVGO, and they got hammered this week. Now, some of them, especially in the setting of AVGO, look like they're setting up for potential bounces, but I'm going to be watching closely to see whether or not they bounce off support or they dive further below. From a seasonality within EdgeRater, these are the stocks that had at least 7 years positive, no more than 2 years to the downside. So not a lot of stocks over the next month. There's probably not a lot of strong seasonality by this scan looking out a month, and perhaps it's because either they didn't have enough years of data, or perhaps because the sell in May phenomenon is about to hit us. I point out some of my favorite stocks in here, including McKesson Corporation, which is up 10 out of 12 years, an average 6% per year. Interestingly, biotech's up 7 out of 9 years, but the one bad year was so bad it actually pulled it down over that period of time. I could look at movement. I don't know anything about AXDX, but it's up 10 out of 12 years for an average of 17% return. UHS, which I think is a hospital system, 10 out of 12, 6%. I mentioned McKesson, Live Nation. I like to review, like I showed you with the Apple chart, stocks I'm interested for seasonality. This is sort of a bottoms up, trying to give me some ideas that I might want to look at. All right, let me close the spreadsheet down and free up some resources. Okay. Now what I'd like to do is quickly look at TradeStation and look at my signals in TradeStation on my indexes. Just cleaning everything up here. All right. All right, so this is a view that you've seen before, and I come into here to look at my major indexes and to look at 3 specific things. I want to look at the color of the price bar, recognizing that a green bar is a filter that says it's okay that I can be long or hold, but I shouldn't go short. A red bar that says it's okay to be short or to hold, but I shouldn't go long. And a blue bar that's a filter that says I can go long or short. I look at these little red dots that are adjacent to the price bar, which tells me I have bearish divergence from a MACD perspective, or I might have MACD divergence. If they're adherent to the bottom of the price bar and I believe they're green, that would be a positive divergence or convergence with the MACD. In addition, I have these little magenta and cyan, I guess is the name of the color, dots. Those represent John Person buy signals. I have my high jump here, and I'm looking to see of the highest extension that the NASDAQ has had, In the last 200 bars, it's at 88%, so it's pretty extended. So very quickly, green price bars on daily, weekly. Monthly looks like it's green as well. I've clearly got MACD divergences on the daily and the weekly. That's a sign that we're getting extended. But to be fair, it can go on for many weeks. Always ends badly. I'm in a person buy signal on the daily, and there's no reason why I can't put those on the weekly as well. Let's see if I can do that. This is the kind of thing I probably shouldn't be doing live, because if I screw up, I may have to reboot TradeStation. Let's just see. I think it's person sentiment. And I don't see it here. No, I'm not going to worry about it. All right. I put the sentiment. Let me just see 1 second here. SM person triggers. Dumb. Sometimes when I do things, it's clearly the best thing is to look at other charts that have what you want in it to make sure that you do it the right way. And you could see I'm on a weekly buy as well. So this is a NASDAQ all clear. Dow Jones Industrial, green, and blue. Don't have the MACD divergence. We're below the upper envelope. We're at only 67% on the high jump. We are actually still in a person sell signal. That's interesting on the daily. On my trade navigator, I'm pretty certain I'm now in a buy signal on person, but green bar here. Okay. Take a look at the S&P 100. Buy signal and green, no divergences. Buy signal on the weekly at 78% on the high jump. The SOX, which is the weak part, I mentioned the semis got killed. We are in a sell signal on the SOX, both by person and by the elder indicator, and no divergences. We did have divergences up here before we had a weekly sell signal come in. On the S&P and the cash markets, we have some divergences, but we are in a buy signal according to my person indicators and according to elder, and about 78%. Futures on the E-minis, MACD divergence, but a buy on the daily and the weekly, both person and elder world. NASDAQ 100, boy, this guy getting extended. As I mentioned, we're sort of getting close to all-time high territory. You can see the red MACD divergence, but you can see we're in a daily and a weekly buy by person and elder. Russell 2000, a little bit weaker in a buy signal by person, but you notice the elder signals have gotten blue, and we're at 83% on the high jump bar. If I look at the Russell and the IWMs, similar blue on a buy signal. What do I do with that? Just tells me that we're still bullish, but some caution is always to be advised, especially late in this market. During the day, I have a number of signals that I'm going to be monitoring. And what's really neat about John's stuff is when I get a new signal, whether it's on a weekly or on a daily or intraday, I get a flashing light that tells me that there's a change in that index. And here, as you can see, the SOX becoming bearish here. The other thing is, if you don't have this already, you need to get this. It's free, and you can basically just double-click there and start looking at who's got earnings coming in of stocks that you might be following, stocks that you might own, etc. And so I apply that to my massive list. I get down to 0 and 1, and I can start to see, I guess 2 days is because Sunday doesn't count. But Apple, Monday, you can see a lot of stocks in the next week or so within the stocks that I personally follow. All right, so now had a great week. Growth stocks doing about the same as the market. TradeStation indicators say that MACD divergence getting high in the high jump, so caution is indicated, but still pointing to a bullish week, or at least a bullish first 1 minute of the week. And of course, the week actually starts Sunday night when futures come out. So let's take a look at HGSI now. And let's go start by going down to the markets, major markets plus, top-down view, which is all price and volume heavily weighted to the last day. And lo and behold, we see strength in the NASDAQ, NYSE, small caps, industrials, the stock market, and weakness in gold, volatility, semis, silver, bonds, and the dollar, and small stocks lagging big stocks. If I look at 5-day change in the market, the NASDAQ was up 4.3, NASDAQ 100 was up 4.3, the NASDAQ was up 3.2, transports had a good week, we're up 2.7, volatility got hammered, 11.5, gold, silver, bonds, oil, and dollar to the downside, as were semiconductors. I then want to look at my favorites. We'll start with the S&P 500. Now, we know there were a lot of kahunas earlier in the week, so I'm not going to stick in this view. Here was that positive kahuna on Monday, but let's look into that clean view that I use, or cleaner view, and let's just talk about what I'm looking at here. I'm looking at, this is the S&P 500. I'm not going to show you that's been an uptrend since March of 9. You know that. And one thing I mentioned was that it sort of broke above a short-term trading range. And what I meant by that was we're in a long-term trading range, but the short-term peak that I was concerned about is probably somewhere in this area here. And it may not be above it yet, but it's trying hard to get above that line. This line here is probably somewhere up here, and clearly we'll continue to push for additional all-time highs. But we're not at the top of this trading range, which has turned us around several times. We're not at the bottom of the trading range, which has allowed us to reverse several times. We're sort of in the middle. And this line here is sort of my line in the sand. And if we continue above that line, I think we go out and perhaps come back up to the top of the trend line. But this is a place where if you want to raise a little caution flag, might be a natural place to expect some reversal. Take a look at the NASDAQ. Let's go into a monthly. Let's take a top here, hold the shift key, and let's take it across. And there you have it, our all-time high at 51.32. And you could see how close we are in the NASDAQ. And it seems silly for us to get here and not take it out. So that's going to be my target. Now, if I go back to a daily chart, still got a little ways to get there. Again, we really take a look at, draw some trend lines here. I've become a big fan of trend lines. Maybe too much of a fan of trend lines, but and you can draw trend lines in many different ways, and I kind of draw several to get my support and resistance. It looks to me like we're going up to the top of that trend line, and we're certainly going to threaten all-time highs in NASDAQ. Again, we're not at the top of the range. We're not at the bottom of the range. We've got a little ways to run. Still bullish on the NASDAQ. How about the Russell 2000? We already know that the Russell 2000 is a little bit weaker. And, you know, one of the things about the Russell 2000, me and the trend lines, if you think I have a lot of trend lines, go watch Harry Boxer. We're in this sort of this range here. And I guess I could have extended it down here quite a bit as well. And we've been in a trading range that's heading up at a pretty good angle here. And it looks, you know, we're clearly on the bottom part of that trading range. One would hope to see a bounce here. But a breakdown below here, or certainly below the 50-day moving average, would throw a grain in the salt of my enthusiasm. So a little bit of weakness in the Russell 2000 comparatively. Let's take a look at the Dow Jones Industrials. You could see a wedge that I was drawing last week. We actually broke above resistance, so breaking out of the trading range perhaps on the Dow. And if we look at transports, which have been down in the dumps, and you could see Friday, Thursday, Wednesday, Tuesday, Monday, broke above this area here that had been, not support necessarily. This was the area that I felt we would come down to from earlier between the 200 and this trend line, broke above it, and now heading back into the middle of its channel, of its trading range. So the Dow transports came up nicely, and you could see this is what every utility stock looks like. Pull back to the 200-day moving average, and then a jump up on Friday, driven perhaps by a thirst for yield. If I look at the dollar broke down below support here, and that might bode well for U.S. stocks. That might also bode well for silver and gold, and that other one, copper, that I mentioned. And we'll see if this is just a short-term blip and it gets back above support here, or does it come back down, which for many things might be a good thing. I mentioned gold, not yet a believer, and you could see that gold had a failure here this week. Now, despite that, and I apologize to my friend Harvey if he wanted to take gold and I talked him out of it, but you could see Newmont Mining looks nothing like gold and silver, and I'll show you silver in a second. Newmont Mining breaking above the 50, and it actually showed up on my scan that I was showing Harvey, which is I scan for stocks at the 50, within 1% of the 50, having a kahuna on Thursday after he took me to a lovely lunch at Le Cirque, and you could see it broke out with pocket pivots, kahunas, and a mobile breakout, everything green on Friday. I have to admit, fundamentals look good, chart looks great. I'm just nervous about gold, and that really only comes down to from looking at, the rest of the gold marketplace, which doesn't look nearly as strong as Newmont Mining. That has no resemblance to Newmont Mining, which is out of the penalty box and looks like it's heading up. Silver, not much different than gold, failed at the 50, heading down. Eventually, it's going to bounce, and worry about it then. Now, I've seen a lot of people talking about buying commodity ETFs, and that if the dollar actually stabilizes and comes down and oil stabilizes, this might be a place to go fishing. And unlike gold and silver, you can see the commodities have started to trend up. And then lastly, a look at the VIX. Oh, look at oil. The worst performer of the week. And you could see oil is just not doing much here. This is the USO. And lastly, we looked at the dollar. Let's take a look at VIX, which was down 1.5% on Friday. And you look at where the VIX is, and it can go here for a while, but at some point the VIX is going to move up. And when the VIX starts to move up is when you're going to worry about your stocks. I actually bought some VIX protection, and I got 2 more weeks in it. I was a little bit out of the money. It was rather cheap, but I may cover it sooner than later. We'll see what happens this week. So, summary: market strong. Actually looks extremely strong, except for the Russell 2000. It's nice to see transports and utilities coming to the party. Let's take a look about top industries. Last week we saw a small number. We have 176 in all, and those moving up are now down to 55. That's a big improvement from last week. Moving down, maybe a smaller number, we have only 25. I will point out that on the down list are a number of our favorites. Specialty Pharma. Erie Pharmaceuticals was the leader, down 63% on Friday on giant volume. Mallinckrodt also had a tough week. Several of these did poorly. Even Biogen IDEC had a bad day. You don't often see that. But that would be in biotech, and you can see Biogen IDEC was down 6.6%. Gilead, which has earnings this week, were down 1.4%. Amgen, which had blowout earnings, was down 0.7%. So specialty pharma and biotech, who have been leaders, were weak. Precious metal mining, no surprise. Here's the rest of your gold stocks. And obviously, this does not look like Newmont Mining. Here's Goldcore, and it looks a lot like the ETF that we looked at in the penalty box. Other things in the down: oil exploration, services, renewable energy look horrible as well. And again, maybe it's a one-week blip, and all it takes is oil to go up. But these things have some momentum to the downside. And then let's just take then semiconductor manufacturing. I mentioned semis were weak. I don't remember seeing what applied materials looked like. It didn't make my big list. But we can see this is a group that's in the penalty box below the 200-day moving average with a kahuna to the downside. Most of my things here are red. Teradyne, Amcor. If it wasn't an $8 stock, it would look like a pretty neat place to short, but not an $8 stock. So semiconductor manufacturing weak. Infrastructure software, this is interesting. This were a number of our high-moving cybersecurity stocks are in this list, including Vasco, Qualys, to the downside there. Not a big move, but these are stocks that have pretty good volume, although nothing that exciting. So those were to the downside. Whoops, sorry about that. Let's go to the upside on the force and see if there's anything that we might want to look at. That's not what I wanted to do. Sorry about that. I have to All right, so what's to the upside? I mentioned steel, up 8% for the week. Airlines, come fly with me. Cable and satellite, probably up related to the change in the Time Warner. Base metals, you'll see the ore stocks. Carriers play a dividend. Internet media, we'll take a look at that. Restaurants again, and some banks. Utilities were strong. Integrated oils actually were up here. Some of the interesting dividend plays besides utilities might be some of these mortgage finances. The REITs were up. Let's see, steel again, another steel, raw material for steel, as well as steel producers. MLPs, marine shipping, both pay a nice dividend. Some of the investment management companies pay a nice dividend. Let's take a look at the top number of groups. Steel and raw materials, these are the iron ore companies, and look at the 35% 5-day performance in Valley. Junk off the bottom, but it's still off the bottom. This is a stock that, if we go to weekly, you can see once it was a $30-some stock and more. It's been in a downtrend forever. Is it different this time? I think it might be. It pays a small dividend, and it shows all green up here. And big volume after Kahuna on Wednesday. This might be a place to think about. Cliff Natural Resources, same pattern, maybe a day behind. Again, all green above, coming off a Kahuna and massive volume. Rio Tinto, another similar pattern. So the iron ore producers certainly look interesting. Let me go back. I want to Schnitzer Sneal, don't know anything about them, but just notice that they showed up here. This is one of the stocks that I looked at. Horrible fundamentals. Look at the EPS rank, etc. Similar pattern here with a bunch of pocket pivots and kahunas. Everything is green. Doesn't make money, but perhaps that's going to change. Pays a 4.4% dividend yield. Is this a bottoming process? Looks like it to me. So Schnitzer Steel may be of interest. These are all junk off the bottom. Now, what's not junk off the bottom are airlines. I own a lot of these, and every time I get too fat in airlines, I get burned. So I don't know. American Airlines had a big move up this week. And, I guess I should worry about it when it gets to the top of its trading range. It's getting close. Big earnings projections for this year. You could see the next 2 quarterly earnings and what percent they're up. At some point, maybe Wall Street decides that that airlines are an investment again, and they look at this growth rate coming in and say a PE of 9.25 small, and maybe it gets an elevated PE. And if you look at 8+ in earnings, that's a huge opportunity if the stock's PE goes to 12 or 13. That's American Airlines. Hawaiian Holdings, power of earnings. Here's an earnings miss. Here's an earnings make. And you can see the increased estimates going forward. Look at the great earnings per share growth. I wasn't kidding when I said American Airlines, if they can get a multiple of 12, it's not unusual. That would cause a movement there. I think Hawaiian Air will threaten its prior all-time high, which occurred right before they had an earnings miss. Delta Airlines, if you look at this on a weekly, you can see how strong Delta has been. Pulled back to the 50 weekly here and bounced. No, these are not person buy signals. Those are earnings dates. And you can see here we've had a nice move up, mostly green, pocket pivots, OBVs turned up, multiple of 13, good earnings coming into the stock. No reason not to expect it to go higher. Alaska Air Group broke out on Friday after a big day on Thursday. Pocket pivots, kahunas, mostly green, great earnings per share growth, small dividend yield. United Continental, probably the weak sister here, great earnings coming into the stock. PE only 8. Maybe you go in the penalty box if you're the recent airlines that had gone bankrupt and they emerged. Not as pretty a pattern, still below the 50. Had a kind of a shooting star looking candle on Friday. Less interested in United. Virgin, I am interested. It's an IPO. It's in the penalty box. It looks to me like it wants to move up. It's got great earnings per share coming into the stock. Had a kahuna and a pocket pivot on Friday. Probably will see some resistance at that blue 50-day moving average. And then Southwest, perhaps one of the best, going sideways now, basing since December. Maybe now it's time for it to take advantage of its growing earnings and make a pop. So pick your airline. There's plenty to like. There's even more, but there's only so much time. Camel and Satellite, as I mentioned, there was probably a failed merger caused this group to move, and you could see a big gap up on Friday. I don't know enough about this group to comment. It's got good dividend plays. Here's 1.9%, Comcast 1.7%, Cablevision, nice move up here, 3% dividend. I'm not sure if there's some thought about these maybe takeover plays themselves. But clearly dividends and nice movement this week, some of it related to some M&A stuff. Base metals, I mentioned copper looked good. So, similar to the iron ore plays, junk off the bottom, but fundamentals up here, or the technicals up here look good. Small dividend, makes money, not great growth rate. Bottom fishing here. Now, is it done going down? It's probably close, but you may be holding this a long time before you make money. I do, on the other hand, find this guy a little bit more interesting. This is Techminco. It's a Canadian company. Weaker loonie than the U.S. dollar, so that may favor Canadian equities. It makes money, and if you believe this, it will actually have more money coming in the second quarter. It's a big revenue, 8-10 billion of revenue a year, 9-10. Couple of kahunas into the last week. I learned a long time when I start to see multiple kahunas, I pay attention. Mobile breakout from a squeeze on Friday, and look at that, a 5.5% dividend. Techminco, TCK, Canadian stock, iron ore and copper. I believe it is in my, and coal, in my watch list, maybe not as much copper. And then here's Southern Peru Copper, another sideways stock for quite some time, makes money but lowering earnings growth, small dividend, breaking out. Not sure if it's just a big South American thing or a copper thing, but that looks a little bit interesting as well. Continuing down our list, telecom carriers, it's all about the dividend yield. You won't see great looking charts. Here it is struggling at the 200. Here's the group strength is pretty high, but there's a dividend of 5.5%. That was AT&T. Here's Verizon going sideways forever. Group strength is great. Dividend 4.4%. These are not growth stocks. These are great dividend payers. Vodafone 5.1%. Let's see if the one that I'm interested in is in this group. I've been doing some work with John Person, and I send him some thoughts every weekend. Here's one I was interested in, and it's clearly a junk off the bottom stock. And the reason why I had interest in it is partly because of a 12.9% dividend. And let's go. Every time I reset everything, I have to reset everything. That was sort of redundant to say that. But let's just take a look at TKC and a little bit of how I interpret with John's stuff. Here we go. So a couple of things. The reason why I have interest in Turkcell is on-balance volume on my daily is heading up. I made a lower low here, yet my person histogram did not even break the midline. So that shows reducing momentum to the downside. I am in a person buy signal now going back a couple of weeks, which I missed. Then I step over to the weekly, and on the weekly I see a high close doji occurred on Friday, and again a lower low but a higher low on the MACD histogram. Don't like the OBV on the weekly, but I've got divergences, not in the MACD, in the John Person histogram on both the daily and the weeklies. My OBV looks great on the daily. Maybe it's an early buy, but I find this interesting, especially when I look at a 12.9% dividend in a strong group, obviously looking at a part of the world that perhaps is not the most secure in Turkey, but Turkcell, TKC, I'm not even sure if it's only in Turkey, might be an interesting play off the bottom. Certainly not a growth stock, but this is not a list of growth stocks. This is a list of dividend-paying infrastructure stocks. Internet media, Google had good earnings. Actually, I thought they were bad earnings when I first looked at them, but I guess they were good earnings with a Bible gap up on Friday. Showing a long-legged doji, closing in the midline. I've noted had a couple of kahunas coming into earnings and pocket pivots. Mobile breakout out of a squeeze back here, broke above the 200 and the 50, so maybe not a big surprise. Google, expensive stock. If I put it on a weekly, just reemphasizes that this is the Google C, been all over the place since it was issued. And here's the Google L, looks a little bit better, sideways since February, perhaps getting ready to break out again. And let's go back to the daily, and you can see it here. Not my favorite stock, pretty good company, and I use their stuff all the time. Now, this one I found to be even more interesting. Earnings are not out until the 29th, so that means they're this week, so I probably will pass on it. Well, actually, it's out of curiosity. Shouldn't ask something you don't know the answer, but let's see what Baidu looks like from an earnings per share time. So Baidu, from April 30th to June 10th, is sort of a 50-50. 4 years up, 5 years down. Or down 4 out of 9 years, rather. Average down 5.3%. Nothing very exciting there. So I probably wouldn't think about it until after earnings. But this actually looks kind of constructive to me. It's going sideways here. A couple of kahunas, pocket pivots, a mobile breakout from a squeeze on Friday. This is one that came up on my scan close to a PSAR reversal. And if this thing can break above the 200 and retest, this might be an interesting place to go fishing in Baidu again. Obviously, the whole China market has been hot. Just continuing down the list, restaurants, they're back. And a couple weeks ago, I wanted to short some of these. I don't understand some of their multiples, but boy, did they pop this week. Starbucks, great earnings again. Bible Gap up on Friday. Kahuna's, good earnings per share growth. Earnings per share growth greater than the multiple, probably in a buy range. Again, love to pull back off the 50. It's extended here, high jump at the top. But you may not get a chance at a lower rate. Dunkin' Brands Group, you've got Bible Gap up 2 days in a row. How often do you see that? Boy, talk about momentum coming into a name. Look at the growth rates, pays a small dividend. Yum Brands, again, Bible Gap ups midweek, bunch of kahunas and pocket pivots, everything is green. Something is going on in the restaurant group. Maybe they're finally getting the dividend from cheap gas. Diversified banks. Notice these are all foreign banks up here. Don't really know much about them, so I'm going to skip. Communications equipment, another, well, this is a big Apple story, and then a couple of big earnings plays. So here's Apple. We talked about it before. In a nice uptrend. Had a red candle high on Friday. Not sure I make much of that. It's in a squeeze. Everything's green on my technicals. All I can say is be careful going into earnings. Yet, look at the earnings per share growth rates, which have been stagnant, have now gone double digit. In fact, are double what the PE is. Maybe it's time for Apple to start growing. Juniper, one of John's picks a couple weeks ago, big gap up on Friday. Congrats to John. Bible Gap up, Kahuna, pocket pivot. He gave this out several times in his trading chat room. Iris Group also up on earnings. Earnings can obviously make you or break you, and then utilities. So that's some of the strength that I saw. Now, I mentioned that last week the group inclusion filter was something that I ran, and those stocks were up. I think 70% were up, and they were up well above the S&P 500. Let's do a quick group inclusion filter. So let's use the standard one that I use. So a group inclusion report, and we're going to make a group from this, and we're just going to look at 20 today, 15 tonight. And we're going to call it AAA Top 15 GIF Web. It's now the 26.2015. And then let's clear this. Load selection. These are the base ones from Ron that I sort of customized a little bit. So I'm basically in the group inclusion filter or report, you're going to find which stocks find themselves into the top of the highest number of bullish groups of my watch list. And these are all the different groups I put together. So I got a lot of standard groups I'm testing. And let me just throw in my consolidated buys in the Market Smith 250. Let's hit OK. We'll take a look at what comes to the top, and then we'll take a quick look at those 15. And you'll never read that, so let me make that bigger. I don't know why I got a 50% zoom. Horizon Pharmaceuticals, been one we've talked about ad nauseum. It's in 14 of the groups. Autohome, Ligand, Inferna, Centene, Acadia, JetBlue, Skeechers. So let's take a look at these stocks. These are the best of the best. These are stocks that are finding themselves in the highest number of bullish groups. So since I made a group from list, it should be right here. It is. Let's just look at them in alphabetical order and see if there's anything that's in a decent setup for a buy. Here's Acadia. Not much earnings out the second quarter, multiple 40, no dividend. Sideways right below a PSAR dot, mobile breakout from a squeeze on Friday with a pocket pivot. If it breaks above that PSAR dot, it might be interesting. It's had a big run. Don't like the fact that its earnings growth is going away. Aris Group already had earnings come out. They were big. They were a big beat. Going forward, they don't look so hot. I'd probably pass. I don't understand auto home. It's expensive, but it's got earnings growth rate to support it. I guess you could call this a gigantic cup and a handle and a breakout. It might be something for cancelers to like. Everything is green. Lots of pocket pivots, OBV getting up. Might see some resistance in this area and then again up here, but it looks like it wants to go higher. Centene, this is one of my favorites. This is tight, lower left, upper right, sideways for about a month and a half, and it broke out this week out of a squeeze. Multiple kahunas and pocket pivots. They're a provider of Medicare and Medicaid services. Big winner in Obamacare. Blue Mobile, small networking software company. They've had all kinds of issues. I don't understand this stock, why it's so exciting. Doesn't make any money. Cheap stock. I wouldn't pay much attention to it. That's me. Hawaiian Holdings. Okay. Here is the time that I started to go heavy on options on Hawaiian Holdings. It was a stock that had missed earnings here, put in a great base, had a kahuna here, and broke above the 50 in a strong group. These numbers and earnings per share the next 2 quarters have been revised since it had a big beat and raise. And you could see that that 50 was a good place to be looking at it, although the stock did do nothing here. But had you put a stop somewhere in this area, you probably were still in the stock. And then all of a sudden, earnings came out and boom. So I think the stock has a lot more way to go. Mobile breakout from a squeeze, Bible gap up, technicals are green from a kahuna on the bottom, great earnings per share growth, Hawaiian Holdings. Horizon Pharma, hard to buy this one now, but look at the earnings per share growth. Look at the PE. Nice up move. I've got some leaps on this one that I bought a long time ago. I may take my profits on half, which makes sense, and see if this thing doesn't get taken out, because this stock has really been a huge performer. And I beat you guys up when it was in this space and to buy it when it broke out. So this was a great opportunity. Inferna, communications equipment, don't know much about it. Pull back Wednesday and Thursday, nice move on Friday, still below the PSAR, great earnings per share growth, might be one to look at. Jazz Pharmaceuticals, a specialty pharma stock, hard one to buy up here at resistance because it seems to like to fall down from resistance, a great trading range stock, but certainly leading right now. JetBlue, probably the best looking chart in the airlines. Not only is it a great looking chart, look at the earnings per share growth coming in, does not pay a dividend. Ligand Pharmaceuticals, this is sort of a royalty play where they have a piece of a lot of different biotech products, so they're not tied to one product's results. They have the ability to sell off their royalty or hold on and grow and get dividend payments based upon, or royalty payments based upon sales. I wish they paid a dividend. It's been in a long uptrend here, sort of a weekly cup and handle and breakout. Nice looking chart here, getting expensive with a multiple of 88. Noah Holdings, a Chinese asset management company. This has been on the list for a long time. I have a hard time with Chinese asset managers, but this thing looks pretty darn good. Rackspace Holdings, cloud play, sideways for quite some time. Mobile breakout from squeeze, breakout, pocket pivot, and kahuna all green on Friday. Earnings not out to May 11th. This may have been in sympathy to Aris or somebody else. This looks interesting. Skeechers, great earnings. Bible gap up here out of a squeeze. Kahuna's pocket pivots. Doesn't look expensive with a multiple of 27 and earnings per share growth rates of twice that coming into the stock. Still probably viable despite the big move up. Don't know anything about Sky Mobi. Stock doesn't look that great, although I guess if I just looked at it from 3.5 to 5.3, it's a 50% run. Cheap stock, not interested. And so that was one tool to find some of the better stocks. Some of the other things that I do in HGSI is I open up my warehouse view to maximize it, go up to all securities, and pick some of your favorite scans. Well, here's a couple of mine. Volume Buzz. These are the stocks that had 5 times the volume on Friday compared to normal. Let's see if any of these are potentially viable. Chinese Auto Logistics, $2 stock next. Gigamon, big viable gap up, closed at the top of the day with a kahuna. Everything's green. Don't like the earnings in the PE, skip. Here's one that I looked at with Harvey. It's a cheap stock in uranium. Don't like the earnings, but had huge volume coming in. Looks like it's already run its course, perhaps. Chinese drugstore, eHealth. Finally, one that may be viable. This is a stock that does a lot of the signups, or company for Obamacare. If you look for insurance on the web, there's a good chance you'll end up at one of their sites. They must have had earnings come out because their next earnings are not until July. Big earnings coming in next quarter. Maybe that's why the pop. Cheap stock. Good website. Not sure I want to be owning the company. And then we talked about Time Warner, probably related to unwinding of a deal. Nothing there to write home about. Let's look at these. These are stocks in an uptrend that are close to the 50 and had a forced kahuna on Friday. Get back here. Some of these might be interesting. Here's Alibaba. I actually like this chart. I don't like bottom fishing, but I've been going sideways, or Alibaba's going sideways since the beginning of March. We're now getting into May. It broke above the 50 on the close. You can see the strength of the group. It had a kahuna and a mobile breakout from a squeeze. It makes money. Maybe this thing is done going down and it's time to start nibbling on Alibaba. It's still an expensive stock. Into Republic, again, to be here, you have to be within 1% of the 50 and have had a kahuna, and your force has to be green. Look at the earnings coming into the Interpublic group next quarter. Might be worth a look because of that. Celgene, one of my favorite biotechs, trades at a multiple about equal to its growth rate. In a downtrend, had a big move on Friday. There's this chatter about a takeover by Bristol Myers. They also had a favorable opinion about one of their drugs in Europe. It did have a kahuna. Eversource Energy. This must be a utility because it's got that pattern on the 200-day. It did have a kahuna. Pays a 3.3% dividend. This looks like a good time to be buying utilities. Here's a REIT. Looks just like utility. Pays a 5% dividend. Great earnings per share growth coming in. Kahuna is sitting right on a squeeze. Mobile breakup from a squeeze. That looks like an interesting buy opportunity there as well. See if there's anything here that I put on my list that I really liked. Nope. All right, so that's a scan that's finding me stocks that are close to the 50 that had momentum. Here are stocks that are squeezing right below the PSAR dot. We already looked at Baidu, and I talked about how that one intrigued me, but earnings are right around the corner. So by definition, these stocks have to be in a squeeze, which means they're probably going sideways. They're also near support if they're squeezing, typically, and they're right under the PSAR dot, which means a positive move flips that dot from resistance to support. It's a buying system that many people probably use, and I found it's a great time to be getting into a stock when that occurs. It also had a kahuna and a mobile breakout from a squeeze. Here's Nike. Sideways, it's in a squeeze right below the PSAR dot. I already told you shoes are doing well with Skechers. Red Hat, high base right below the PSAR dot. See if there's any here that I really liked. Energy Transfer Partners. Here's a stock that is being beaten down. It's in a high closed doji right below a PSAR reversal dot. Had kahuna on Thursday, mobile breakout from a squeeze on Friday. Pays a 7.1% dividend. I don't like it. It's in the penalty box. Don't like the earnings per share rate. Do like the dividend. Sometimes you find great stocks in this scan, sometimes you don't. Here's a pretty good looking stock, but it's $127, so it's probably limited how many shares anybody's going to buy. Here's Ashland Oil, a specialty chemical, lower left, upper right. You can see it's squeezing, and it's right below the PSAR dot. Again, the purpose of this scan is to find stocks that are squeezing that are close to a PSAR reversal. And then there's always David Ghilardi's Sprinters, which is another one that I use to find great stocks. I know I have it here somewhere because I use it every day. And you can see the airline stocks, Centene, Horizon coming to the top here. Now, often I like to show you how in TradeStation, like for example, in TradeStation, I can scan for stocks that have specific buy signals. So one of the things that I look at is perhaps I'll take the MarketSmith 250 and look for high closed dojis. And let's take a look at LinkedIn. Now, what a high closed doji is, it is a very viable buy signal by itself, and it is a bar in a downtrend, and there's not much of a downtrend here, but there is some. And let me take off the labels there, which I don't even think are correct, but that's a different story altogether. It's for something that I don't think was meant for it's not distributed, it's just something that was internal use. So here you have a couple of doji days, and you have this stock here. So if you have a doji in a downtrend, and there is a slight downtrend there, and then you have within 2 trading days, a bar, a trading day where you close above the high of the doji day. It's a high closed doji and can be a reversal and signal a decent buying opportunity. So a high closed doji, so I'll look for those. I'll look at also weekly high closed dojis. You can see quite a few of those, including NOAA that we looked at earlier. And Auto Home, also a weekly high closed doji. Let me get rid of those here. But what I'm able to do is I'm able to take my list of the weekend, and I call that my top 1,000. This week was about 1,200, and I could look for those high closed dojis on a daily basis. I could look for buy signal 2. Buy signal 2 is probably my favorite buy signal. Let's look at materials. And what buy signal 2 is, it's basically a buy signal occurring right off of monthly support here in this blue line. There's a percentage that you can be above it. So this is a buy signal at support. And since I like pullbacks to support, and then I like to see momentum coming in, so during the week, I'm pretty much just running my top stocks here, or I'm running the entire market with a price and volume filter, and I'm looking for high closed dojis on a daily and on a weekly basis, and then I'm looking at buy signal 1, buy signal 2, or I'm looking at sell signal 1, sell signal 2 if I'm worried to the downside. Now, speaking of the downside, I wanted to go back into HGSI and talk a little bit about semiconductors. And here's what I'm seeing. Skyworks, been a leader. Pulled to the 50-day moving average, had a mobile breakdown out of a squeeze and a kahuna and a pocket pivot down. I get intrigued that it stopped right on the 200-day moving average. Is this a pullback to support, and is it going to be, as it's been in the past, here we got a little bit below it, a good place to be nibbling and buying the stock? I think it will be, and I'm going to set my buy stop above the high of Friday so I don't go into the stock unless there's a move. Look at the earnings per share growth. Look at AVGO. Not such a pretty story. This one surprised me because great earnings per share growth, leading stock, and it is broken below the 50. Look at CAVM. Big break below the 50. IDTI. Big break below the 50. This is a leading group that's rolling over. Now, to me, the saving grace for these could be great earnings from Apple turning around this group. But without those earnings, maybe some of them will have good earnings. Here's Tower Semiconductor pulling directly back to the 50. So there's a lot of these out there. Broadcom to the 50. It'll be very interesting to see. And when you look at some of these leaders, they've had breaks below the 50 before, but typically these visits to the 50 and breaks have been great buying opportunities, and they've got lots of earnings. So I'm going to be watching very closely on this group of stocks. Lastly, not to leave the thinkorswimmers out of the party, one thing that you can be doing in thinkorswim is you could be scanning the market, and you can create your own scans and look for PPS buy and sell signals, and then you can run a scan and you can look for those stocks with person buy signals. You can kind of get an idea of what markets they're in. Some don't get put in any. When I look through this, I see a lot of material stocks, fertilizer, specialty chemicals, industrials. But these are the stocks, and several of these are stocks we talked about. BMS is a paper packaging company. I actually bought it by mistake. I thought I was buying Bristol Myers Squibb. There's my TCK that I mentioned, the Techminco. There's the Newmont Mining, the Schnitzer Steel. So many of the stocks that we've talked about have buy signals on the person pivot signal. I can look for sell signals. Now, if you don't know how to create these, come to my meeting. You'll go home with a full set of them, but more importantly, you'll learn how to create them yourself. So we're looking for how many stocks have person sell signals. And I'm looking at all stocks, 250 and 150,000, and there are 139. And I see a lot of oil, gas, and exploration and drillers, educational service companies, biotech and life sciences, regional banks, weak, especially with interest rates being so low. So I get an idea, and then look at the number of semiconductors that have person sell signals. Now, I can look at perhaps, maybe I'm interested in a biotech, biocell. Here's biotech PPS buys. Should be a quick scan. Celgene, Spectrum. How about biotech PPS cells? Alexion, Biogen IDEC, Essentia. So I can go down to the same signals that I use in TradeStation, I can use in thinkorswim. A big advantage of thinkorswim is that I can scan the market real time during the day. A disadvantage is that MarketWatch is limited in the number of stocks, and it's quite inferior compared to TradeStation's radar. In TradeStation's radar, I have thousands of stocks that I'm scanning on a daily basis, looking for signals that might tell me to go in or out of the market. And that's a real time on whatever time frame I want to set. and I contrast that with the scanner, which, at least for the person's signals and my own signals, it's end of day. And I also will scan for some of my favorites in HGSI, Kahuna Forces, Mobile Breakouts, and others. Lastly, anything else I wanted to do, you can create charts in Thinkorswim. Here's one of my favorite things I utilize during the day, is I've created market charts, and these market charts have on them a lot of the labels of the HGSI indicators, candlestick charts with a green 17, yellow 50, and red 200-day moving average, and superimposed on them are person buy-sell signals. You can see there is a daily sell still on the Dow Jones Industrials on the diamonds. Buys are in place on the Qs, the spiders. IWMs look like they have a daily sell as well. USO, a daily sell, and gold, a daily sell. I keep a number of these going on in the background, and I'll typically, if I find, I haven't set it up for this coming week, but if there's stocks that I'm interested in, I'll stick them in here and monitor them real time, and I have multiple monitors and multiple screens that I'll place them on. Well, this has been a long one. I hope you all got something out of it. Just last comment about my meeting. We're looking pretty full. We're looking like we're going to be pretty full. We still have spaces available. Love to have you if you're interested. hgsidoc@gmail.com. I will post notices on all the boards when there's no spots available. And it is first come, first served. A couple people last week asked me to hold rooms. Since I've been hold positions since I was out of town this week, I will give them until Wednesday to have their check-in. If the checks are not there, I'm not holding rooms just because it's not fair to everybody else. If you can't commit, you can't commit. See you soon. We'll do this again next week. Goodbye, everybody.